All right, let's review Monday, May 6th. Starting off after, what is this, the first 6 bars. So after the first 6 bars, I was thinking that the day had an increased chance of being a trading range. And the reason for that, there's 2 reasons. One, look at the first, just look at the first few bars. What are they doing? They're overlapping. All right, we have a bull bar and then a bear bar, doji bar, and we have tails on the bottoms of the bars. So the bears are trying several times to break out lower. They're trying to break out below the 200 moving average. Once the market goes higher above this bar 2, it gets this big tail on top. So we failed to go lower, we failed to go higher. The bears the bars are decently sized bars, but they just can't go anywhere. There's lots of overlap and the breakouts are failing. So that in itself is a sign there's going to be a trading range. And also, if you look at a prior day, so there's actually a lot of previous examples. So I'll just look at yesterday as an example. So here's yesterday, the open. Market opened, had 3 sideways bars, tried to break below, reverse back up, tried to break above, but then ended up reversing back down and test the open. So this is what ended up happening here. Well, if you draw a measure move up, maybe from the low of here to the high bar 1, we were even able to get to above this measure move target. So this day was in a trading range, even though it had bullish bias. And we opened, and then sellers were able to make money above anything. And like I was saying, there's actually most of our previous days have an example of that. Like looking at this day, for example, we have this move up here on the open in the first 8 bars or so, but you're getting this bad follow through. So bull bar, bad follow through, a couple bull bars, bad follow through, and you end up with a wedge top, and then you get this reversal back down. And now it's 10:30. Now we're an hour into the day, and the market really hasn't gone anywhere. We've had some large bars and some large moves, but it hasn't gone anywhere. And so once again, thinking about probably by this first hour in, I'd be thinking of a trading range and drawing my measured move target like this. And once again, we didn't reach that. So yes, there was a bullish bias on this day, but the sellers were able to make money. So I would still consider it a trading range day. And if you look at our open here, we got something quite similar to that, right? Overlapping bars, breakouts that were failing below and above. So I would draw my measure move target from here. So from the low to the high. And we were not able to reach that today. I was actually buying in here, trying to bet that we would get up to that measure move target and get up to the overnight high and to yesterday's close. However, we fell short of that. We were not able to actually get up. And the day ended up as a trading range. If you were to look at this on the daily chart, the day would open here, and we'd have a tail on the bottom and a big tail on top, and it'd basically just be a big doji day. And here it is. So this is the daily chart. And this is how the day ended up. A big tail on top, little tail on bottom. This is a doji bar. It's a neutral bar. So it actually ended up as a trading range type of day. So by the first 7 bars, this 7th bar, you should be having an idea in your head that there's an increased chance today will be a trading range day. And yes, there was a lot of bullishness during the day, but look at these highs. This high, any of these highs. People could have put a limit order to sell above any of those highs, and they could have made money. Either on the little pullback they got, or they could have sold more higher, and they could have scaled in and made money, especially at this end of day sell-off. But even without this, just during this move up, there could have been sellers above bars, and they could have made money. So that was a sign that the bulls were not all that strong. And some of the evidence of that came early on this trading range type of open. So let's look at some of the trade ideas. First one I'm going to mark is right here, and this is a swing trade, so this is not a scalp. So what do we have here? Well, we have a double top, so this high, and then we have a second high here. I would call this a double top. And now we're getting this big bear bar. So yes, we're thinking trading range. However, we're also thinking that this range will probably double in size. We're thinking that we've had this this big down, big up move on the open. When you get a trading range type open, but it's big bars, and when the range is about half of the size of a normal day's range, kind of like here, like this is still, right, this is not very big compared to the previous day's range. And just like this is not all that big compared to the previous day's range. That will probably double in size. And ultimately it did. But if we're thinking about this short here for a swing trade, people that would short here, they'd be shorting betting on us getting down to this measure move target down here. All right, so they may be going for 4 times their risk or maybe even more. So those are the types of traders that would short there. I don't think this would be good enough of a high probability for a scalp because we have had so many reversals right here. We've gone sideways so much. And there's also some support here. The 200 moving average, the open of the day is right below. So I would avoid trying to sell here for a scalp, but I think that'd be a reasonable place to go for a swing trade on the open, betting on this range doubling. Similarly, looking at this short here, this would also be a swing trade for a short. It's kind of the same idea where we can still be somewhat on the open. You know, it's not too late in the day. It would be 11:30 right here. And what have we had now? We've had some kind of wedge top possibly. So first push, pull back, second push, pull back, third push. So some kind of wedge pattern here. And we're also getting a double top with these two highs right here. So I think some sellers would start to try to sell here. And once again, these traders, they would be trying to go for some kind of swing trade down. They'd say this is an early wedge top, and you might be able to get a big swing down to down here. So they would be going for 5 times other risk or more. And in my opinion, I think they'd be trying to, it's a low probability bet, but when they're right, then they're going to get a move down to here. So that's what the traders are thinking that are selling here. So once again, not good enough for a scalp. And so why is it not high probability for a scalp? Well, it's really just your first close below the moving average. So we were above it, and this is just the first close below. The market is still slanted upwards. You know, I could draw on a channel through here if I wanted. You know, so there's clearly some kind of channel working up through here. And the market is just still bullish. We really haven't had much of a sign yet of being bearish. So until the market proves itself that it's bearish, then I really wouldn't want to try to be looking for short scalps. I'd rather be looking for long scalps because the market is pointed upwards. And until then, if you're going to bet on something being short, I think it needs to be a swing trade like this. Like we said, wedge top, double top, possible opening reversal. And this is an early short, but if you're right, then there's a lot of room for reward. Next trade is going to be a long, and I'm going to have this marked as a long here. Okay, so why is this okay for a trade? Well, look at where we are. This is different from what we've had over here. And it's different because now, instead of this level acting as resistance, it's now acting as support. We're now above it. We've double bottomed here and here. And then there's going to be some people buying above that bar. And once again, I think this is going to be another swing trade. I think your probability just isn't strong enough, considering that all the other buys near the top of this channel have failed so far. However, look, you have this target above. Okay, so there's 2 times your risk. And what are your targets above? You have the overnight high is up here. You have the close of yesterday. So now we've broken above this area of resistance. It's not acting as support, and you have this target that's pretty far above. So you could be going for 3 or 4 times your risk trying to get up to this level up here. So another reason it's lower probability is because it's following this bear bar. Right? We've had bull bar, bear bar, bull bar, bear bar, bull bar, bear bar. Now this is an inside bull bar. So it's with this following this bear bar, it's lower probability. However, looking at this next bull bar, looking at this, I think this is okay for a scalp. So I think to buy above this. Now we've had 3 bull bars in a row after this test of this support and resistance, and so I think that's reasonable for a buy scalp. You can also swing trade this, but I think the odds are high enough that you could actually buy that for a scalp above this bar. Well, ultimately the bulls were not ready yet to break out above that price. So market pulls back, it gets below this support resistance level we have drawn in. It gets below the moving average. However, this just ends up as a bear trap. It ends up like this. Remember, we had these 3 bear bars here, but then bad follow through and the market went up. We had this bear leg here, but bad follow through, the market ended up going higher. So when to get long during this? Well, above the moving average, we pull back once, go higher, pull back twice, and bull bar. So I think this is a good spot here. And I think this is good enough for a scalp because of the larger context. You know, you could also look at it as a head and shoulders bottom, left shoulder, head, right shoulder. And so now we're kind of at that important point where if the market's going to go higher, this is going to be that price that it breaks out at. So I think the odds are high enough for a scalp, but I also think it's good enough for a swing trade because you have so much room above. And it'd be reasonable to think that after the upward trend we've had today that they'd have enough room, they'd have enough energy to be able to get up to here. Especially after a couple bear traps like this. Bears were trapped once, trapped twice. All right, where are they going to be given up? Somewhere like above a bar like this, or maybe a bar over here. So once again, you come across a point where you have this support and resistance level here act as resistance, but now we're above it. Now it's acting as support once and twice, and now you're having this bull bar. Now, I like the context of buying here, but you're kind of going to run into some issues. One, I think you need to try to be swing trading here, but you don't have that much room left because the target is not that far away now. So if we draw this in, all right, so if you're going for a swing trade and 2 times your risk, you have to be getting out up here, which is beyond our support and resistance level. Well, which is beyond this resistance level of the overnight high and of yesterday's close. So that's what kind of makes this trade difficult, is that I think you need to be trying to swing trade. I'm not sure the odds are high enough for a scalp, considering it's been difficult to get these long scalps so far today. And that the target's far away, so I think this would be better to avoid. I think your buy is here, and you probably should just be avoiding trying to buy up here. Another way to look at that is that we've been in this channel so far today. So this is the channel that I'll be looking at. Consider this being a spike and then channel, and then now we are near the top of our channel line here. All right, so it's been somewhat of a, right, the day hasn't been all that bullish. It's really been a small pullback bull trend. So it's been going up, but we have had these little small pullbacks that are very persistent during the day. And now we're near the top of this channel. So, you know, that's why I think trying to buy here would be better than trying to buy when you're right up against the top of the channel. So I think that's another reason to try to stay out of that trade. I think if you're buying, this was your buy, you're trying to buy it too high up. Looking at the bear move on the way down, it's always interesting to see how the market does react at your trend lines. We can see 4 bear bars down, and this big tail reacts right at that support line. Bear bar breaks a little bit below, pulls back. Now this tail is testing this trend line through here. So one way you can look at this is that we tested it, it acted as support, we broke through, now it's acting as resistance. Possibly you can see it as a double top. You have this high and this high, so these two tails. Now you have a breakout test of this trend line. So I think this is reasonable for a short here. At this point, you've had 7 bear bars down. You're breaking below the channel. You have this little breakout test pattern. And what is the target below? We have the open of the day. That's fairly far below. And I would say it's low probability that we'll get down there if it wasn't for the time of day that we're at. All right, the time of day, we are transitioning from the middle to the close of the day. So we have the open, which is somewhere here. This is the middle of the day, which is this channel. And now we're getting into that 3 o'clock time when we only have an hour left in the day. And now there's an increased chance we're going to test this open, because that's what the market likes to do at the end of the day. The bulls have been buying, and if they're not confident in holding into the open, holding into the close, then they'll exit, and you got something like this. So this is actually a fairly common pattern. So I like the idea of shorting here for a swing trade, at least going for 2 times your risk. But I think you need to try to be getting more out of it and probably trying to get back down to this open. So maybe you take off half of your profit at 2 times your risk here, and then swing trade the rest into the close here. So I think that'd be a good way to manage a trade like that. What about selling somewhere in here? Well, on the 5-minute chart, you really don't get an opportunity. You don't want to be selling below a bull bar like this, and then this bear bar has this big tail and it's a large bar. However, once you have the idea that the market is probably going lower and there's targets below, you can go down to a lower time frame and look for swing trade there. So let's look at that. This bull bar with this big tail closed at 1540. So 1540 is right about here. So at this point, somewhere in here, we want to be looking to get short, because we can see on the 5-minute chart, we've had this bearishness, and now we're having this pullback. So we want to try to find an entry on this lower time frame chart. One way to do that is wait for it to go above the moving average, like here, and then it comes back below the moving average and retests it. And it's also retesting the 200 moving average as well. So now we're below the 200 moving average. And I think some traders would actually short below that bear bar, that first close. Then another idea is to wait for this retest that you get here, and then big bear bar. So this is how you can find entries on, even when the 5-minute chart is not giving you an entry. When you're pretty sure that there's something going on here, that the market's going lower, and this is just some kind of pullback, but you can't find an entry here, then you can go down to a lower time frame, and then you can find an entry there. So that's something that I like to do when in this kind of situation, when you're at the end of the day and you think, yeah, the market's probably going to try to come down and test the open, but I can't quite find an entry during here. Then go down to your lower time frame and look for these pullbacks to the moving average. Look for these tests of resistance. Look for these failed breakouts above the resistance, and then retests of it, and then try to get short below that. So that's all I have for analyzing this chart. And the bigger picture is that we're still within the tariff news era, right? The tariff news is really all that matters right now. So you still need to be agile and willing to not enter a trade or to enter a trade. You just need to be on your toes about it, because that tariff news can change the market in an instant. So thank you guys for watching, and I hope your trading goes well on Tuesday.